Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and happy Friday to you. I hope you guys got some great upcoming plans. It is September 28th. This is the end of the third quarter, so we'll be starting fourth quarter starting next week and end of the month. So it'll be interesting to see what we get for Q3 reports coming up, as we saw GDP earlier this week, and for Q2, that was the final revision. So next month we'll see the initial review of GDP for Q3. We'll have to see if any of this tariff talk has uh, done any effect, had any effects on that. So, but today we do got a lot of data, as you can see here. We'll start off with the personal income for the month of August. So, in July it went up 0.3%. Forecast it was supposed to have a slight uptick to 0.4% increase, but it only went up 0.3%. Still good numbers there. However, we got the other side of things where people are making more money, but they're also spending more money. So as we saw in July, they increased their spending 0.4%. Forecast was supposed to be 0.3, and it came in estimations at 0.3%. Now we'll get into inflation data here. We got personal consumption expenditure, also known as the PCE here, for the month of August. In July, it went up only 0.1%. Forecast 0.1%, and it went up only 0.1%. So very moderate there. However, on the year to year, it went from 2.3% down. It dropped down to 2.2%. So good numbers right there. So that means food and energy is what kind of brought that in. Or brought that up a little bit there, or dropped it a little bit. So as those have decreased a little bit over the summer, or at least in that month there. Now, when you strip out the food and energy, we get what they call the core inflation, or core PCE, and this is what the Fed's favorite gauge for inflation. This is the data that they actually look at for consumer inflation, and what they look at. So, with a 0.1% in July, forecast was to go 0.1%, and it came in zero. So no change in the month of August. And same thing with the year over year, it went from 2 to 2, so it stayed at the same. That was the Fed's target rate, so that was part of their talk when they were going quantitative easing and accommodative. They're going to go up to like 2%, that's their target rate, and we're currently there for 2 months in a row. And they do expect maybe it could go up a little bit higher and come down, but it won't remain there. But again, with these rate hikes, that's what the rate hikes do. They are supposed to try to fight off possible inflation. We'll kind of see if this gets out of control, keep it going out of control, and we'll have to wait to see if if they've gone too far, or just enough to keep it in check. Now we also got the manufacturing data out of the Chicago region, which gives us the Chicago PMI for the month of September. So in August we had 63.6. Forecast for September is supposed to be 62.5, and it dipped a little bit further down to 60.4. So on this type of scale, anything above 50 is considered optimism, or more positive output, and then below that it's a contraction. So we still got a pretty decent number here for Chicago PMI here. Manufacturing in Chicago is still decent, even though we saw a little bit of a dip. This is a 5-month low for this number in Chicago region, but again, still good. And then we got consumer sentiment for the month of September. As you can see, there wasn't much of a change here. It dropped from 100.8, which was the forecast. It remained there, but it just dropped slightly down to 100.1. So it's still good numbers here. People are, for the most part, feeling pretty good about where things are at economy-wise, where lifestyle and everything else are moving along. People are feeling pretty good about things. Headline news: stock market is up so far today. It started kind of a little mixed, going negative and kind of going positive. And then we got some news out of Italy. There's some drama going on with their with the budget. So it looks like they're spending more than what they had budgeted, which could create problems with the EU. And with that, this could be another issue that we saw with Turkey earlier with their currency issues. So this is something that could pop up again and create a little bit more turmoil with the geopolitical news like this. So again, we'll have to kind of wait and see, but this is what's happening on the news so far today, and that's kind of helping out the bond market here. Even though we are down for the day, we were up earlier, like around 8 basis points. We're up currently still from yesterday. We're up about 3 basis points. So there's really not enough really to make a change from yesterday's pricing. As you can see, there wasn't a whole lot of change even before that. We were down for part of the day yesterday and came up and basically closed like +2, and right now we're about +3. So again, really no difference in change in pricing so far today. But we got some good news. As you can see, we had that positive crossover. We're crossing back into the range we need to be at for mortgage-backed securities, getting that trend here, and we got a lot more room here we could potentially go up to. Same thing here on the I'm sorry about that, Treasuries. We got the negative crossover, so we're starting to get this back down into the territory it wants to be. And as you can see here, we got a little bit of room here. We'll probably touch off the 3% at some point. Right now, we're at about 3.05, selling in that range so far today. All right, so that's pretty much wraps things up. Rates are about the same as where we left off yesterday. Next week we'll have more jobs numbers. Will be the big one. We'll have the September's jobs on Friday with the weekly jobs comes on Thursday. ADP report come on Wednesday. So it'll be a pretty big week for jobs data we'll get. All right, so that wraps up everything. If you guys want to see any change in the market or any other updates, just come over to Twitter. You can find me at Mike Bjork, and I do post any changes in the market updates up on there as well. Enjoy your weekend. We'll look forward to see you guys on Monday. Bye-bye.